Hello, everyone. Welcome to the Loan Officer Training Series with the Mortgage Calculator. Today, we're going to be talking about navigating blanket loans or portfolio loans, sometimes they're called. And so we will get into that here in just a moment. Give us just a couple seconds here to go live on all the different platforms, but I do appreciate everybody tuning in nice and early. And it looks like we're live, so we'll go ahead and get it started here. We'll take the chat off the screen for now, but go ahead and keep dropping your comments there in the chat. And you can also drop any questions you have in the chat as we go through the presentation here today. We'd be more than happy to answer them afterwards. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every Tuesday, Wednesday, and Thursday at 12 p.m. Eastern on this show is a different loan officer training topic deep dive, and today we're going to be talking about blanket loans. I'll go ahead and turn it over to Jose to get started. Jose, if you're ready, let's get into it.
Yes, good morning, or actually good afternoon. Good morning for those of us on the West Coast, those of you on the West Coast, because I'm certainly not on the West Coast. Thank you for joining us for today's training webinar on blanket loans, also known as portfolio loans. This is a great tool. Definitely one of the good niches if you want to consider one of the niches that are probably underserved. Blanket loans is one of them. You're not going to have a lot of competition reaching out to investors to discuss blanket loans. So let's get right into navigating blanket loans. So, what exactly are we referring to when we're talking about a blanket loan? Well, like the title of the presentation says, they're also known as portfolio loans because they're the type of loans that an investor will use to finance the properties in the portfolio under one loan. As a blanket loan is a loan encumbering multiple individual properties, each property with their own folio number. So what a blanket loan is not, when we're talking about multiple units, 5 units, 6 units, 8 units, we're talking about individual properties. We're not talking about units in a multi-family building, for example, where it could have 8 units, 10 units. That's a multi-family loan. That's not a blanket loan, right? We're talking units on a blanket loan. It is unit properties, each with their own folio number assigned, their individual properties. As you would guess, the blanket loans are only for investment properties. When you do have the blanket loan, there is only one note, right? So there is only one monthly payment. And very important to note, each property has its own individual title policy, which do all come together, right, to the loan. But each property's title has to be reviewed, which is one of the issues that we're going to discuss coming up. Is that if one of the properties has a cloud on the title, and you want to keep that property in the blanket loan, then your blanket loan may be running into issues unless you resolve the cloud on the title or remove that property from the blanket loan. So, what are some of the transaction details for the blanket loan? Well, great news is we do have options up to 80% LTV for purchases and 75% LTV for cash out refinances. Please do note one very important criteria when you are structuring your blanket loans for your borrowers. Please make sure to discuss carve outs with them. A carve out is essentially removing one or more properties, and it's usually we're trying to remove one, removing one or more properties from the portfolio. This is a very important point to consider because not all blanket loans allow carve outs. So, what if you go through the whole process of the whole loan And right before closing is when this scenario comes out, and the investor then tells you, but you never discussed this with me. Why would I want to get into a loan with my 10 properties? Is, as you know, I'm an investor and I make money on the capital gains, usually is how I like to structure my business. So why would I encumber all 10 properties in one loan where I would not be able to sell one, two, or three of them as I chose? And then the investor may decide to cancel the transaction right then and there, or worse, they close on the deal and then they come at you after the fact with some legal proceedings as to why was I never told that I could not do this, and now I'm trying to sell these two properties at a great deal, and now I'm told I can't do this, and you could be facing uncomfortable situation there. So first and foremost, make sure you discuss carve outs or the need to have a carve out with your investor when structuring their blanket loan. Now, we do have options with a DSCR minimum below one available, but again, that's obviously going to be at reduced interest rates. I mean, excuse me, reduced LTVs, definitely not reduced interest rates, reduced LTVs with that option, and that would be by exception basis only because they all do require above 1.0 DSCR. But we do have it like the option that we have for the low value properties is actually a no ratio DSCR option. 1 to 4 unit properties only with the blanket loan options that we have. And I was mentioning there, we do have options where the loan allocated amount per property could be as low as 50,000. That would be 67,000 minimum property value, 50,000 minimum loan amount. That same option, we can have a minimum property count as low as 2. However, that's also the option that only goes up to 75%. The one that goes up to 80% LTV does require a minimum $100,000 property value. Now, minimum credit score is 650 for the 75% LTV option, and 720 if you're looking for 80% LTV option. Minimum 720 on that one. Now, one of the nice points to consider with the blanket loan is that usually you're only going to have one closing cost from title for the loan, right? Now, they may adjust that closing cost, depend, if it's a blanket loan with 10 or 15 properties, but usually only one closing or settlement cost, as we like to call it. But do please note that there will be a closing or a funding fee from the lender that will vary depending on the number of properties. So again, sometimes there's a preconceived notion on there that the reason why a borrower would pick a blanket loan over individual loans would be because they're going to save money on the transaction. And you save money on some of the transaction fees, like you may save money on the closing fee from title. You also may save money on the underwriting fee because if it's only one loan, there may only be one underwriting fee as opposed to 10 individual loans with 10 individual underwriting fee. But there will be a closing or a funding fee that will vary depending on the number of properties. So the savings from the only one closing cost from title and only one underwriting fee for the one loan will be offset to some extent by this additional closing or funding fee that will be based on the number of properties. So it doesn't mean it'll be charged 10 times. If it's 10 properties, it just means they may say 1 to 5 properties is $500, 6 to 10 properties is $1,000, and so forth and so on, depending on the number of properties that are in the blanket loan. Please do note the maximum loan amount is $2 million if we just. However, higher amounts are definitely possible on an exception basis. Submit your file, compensating factors, and they'll get back to us regarding what is possible for the scenario. So what are, now that we've talked about some of the structure and some of the limitations, even though we're going to get into the limitations a little bit more in the next slide, but what are the actual benefits for a blanket loan, right? What really are the highlights for the blanket loan? And the main one, number one there on the list, is the main strongest point on a blanket loan is that it facilitates the financing of multiple low valued properties, right? That normally you wouldn't be able to finance them. So, for example, we can definitely do a blanket loan for 10 properties that are $75,000, can be financed as a $562,500 blanket loan, right? We group them together. However, one $75,000 property with a $60,000 loan will be very difficult to finance, especially if they're looking to do DSCR, as our lowest loan amount for a DSCR loan is $75,000. So we would usually that equates to a value of somewhere around $93,000, $94,000. So you can see the only way we could do, let's say, two $75,000 properties is with a blanket loan. So that is the main benefit to a blanket loan. I've had them where they come up to me and say, Jose, what's your lowest loan amount? And before I answer the question, I always like to ask them the question is, well, what are you trying to do? Are you trying to buy multiple low valued properties because they have such a good rental rate of return? And their answer is usually, yeah, I'd love to buy those lower value properties, but it seems like I can't find anyone to finance a 75 or $70,000 property. And then the reply there would be, well, why don't you get at least two or more, and then we could handle the transaction via a blanket loan with at least 25% down. And I've had it like that where I've turned that scenario into a five or $600,000 loan when we really probe a little deeper and find out what exactly is the borrower's objective. So that's number one on the list for sure. Number two is the blanket loan is going to result usually in simplified mortgage documentation process, as you do not have to submit the same documents multiple times for multiple loans, right? You just submit one for all 10 properties as opposed to 10 individual loans. Now, as I mentioned earlier, please note that there are additional expenses such as funding fees and closing fees based on the number of properties. The blanket loan, now this is a real good one you may not have considered. The blanket loan allows us to consolidate multiple loans into one loan, thereby freeing up the borrowing capacity tied to the number of individual mortgage loans a borrower may have. So you've seen that one on some of the guidelines. Borrower can have up to 10 properties, borrower can have up to 15 or up to 20, whatever is the property limit. They're really talking about loans. They can have up to 10 loans. So now all of a sudden, if you get those 10 properties and put them under one loan, and the particular loan product that they wanted to get approved for was one that happened to require, limit the number of finance properties a borrower may have, this blanket loan now would allow you to essentially press the reset button and convert those 10 individual loans into one individual loan. And then now you got nine more to go if your borrower was looking at one of the guidelines that said 10 financed loans or in one shot. So that's definitely one you may not have considered. Now, number five there, access additional equity. Now, this is interesting, as pooling the properties under one loan combines the equity. So the lower valued properties with less equity will benefit from being pooled with the higher valued properties with higher equity, so that then your combined loan to value on your portfolio will be lower, and thus free up some additional borrowing capacity for your borrower. So that's an interesting one there, where they can combine all of their properties in one and have a combined loan to value. And then I did touch on this earlier. You can save on the individual underwriting fee per file. Individual underwriting fee in non-QM could be as high as $1,500, $1,600, $1,700, sometimes even a little bit more, depending on the investor where the file is being submitted. So that could be a substantial savings, even if it is going to be offset a bit by an additional closing or funding fee. The additional closing or funding fee is going to be definitely lower than if you add fees for under 7, 8, or 10 file. Substantial savings there uh, regarding the cost for the transaction. So here in our last slide, we're going to touch a little bit further on the challenges that borrowers are going to face uh, when they're trying to originate and close the blanket loan. Now, I already mentioned this one. This is probably the main one that you need to discuss with your borrowers to make sure that everybody's on the same page regarding the carve out, because the main disadvantage to a blanket loan is that it may not be possible for the borrower to sell or refinance individual properties without a partial release clause, also referred to as a carve out. Now, some blanket loans will allow a carve out with restrictions. The restrictions are usually going to be items like paying down additional amount off the payoff to rebalance the portfolio. And one of the blanket loan options that we have, they require you to pay down an additional 20% of the amount of the payoff. So if the payoff for property that's looking to be carved out of the portfolio is $100,000, the payoff would be $100,000 plus 20,000 additional to bring down the balance to and rebalance the risk in the portfolio. So that's a critical component there. And make sure that you cover those details in the beginning rather than in the end. Now, something else you may not have noticed: blanket loans are limited by state because state laws and regulations regarding lending vary from state to state. No two states have the same laws. So if you have properties in 3 different states, you will need 3 separate blanket loans. Now, number 3, equally as important, one to definitely let your borrower know if they do decide, yeah, Jose, that's a great idea, I want to buy some properties with a blanket loan. They have to be aware that the properties need to be purchased from the same seller, right? You cannot have a portfolio loan where you have 15 properties, 5 from one seller, 5 from another, and 5 from another, because the closing has to occur at the same moment, at the same time. You cannot close them at different times with different sellers, getting different monies. That would be a violation of RESPA. Would not allow that. So you got to have one seller on that contract, one seller on the HUD, getting the money. Now it could be 2 or 3 sellers of all the properties, but I guess what I mean by one seller is one seller or one group of sellers for the portfolio being sold. Right? Doesn't mean you can only have one seller. You can have 2, 3, 4, 5 sellers. It just has to be the sellers of the portfolio. It's really what we're trying to establish there. And last but not least, I did touch on this. All the properties serve as collateral for each other, right? They're all in it together. So if you have one faltering property, that could jeopardize the entire portfolio. So if one property has a cloud on the title, guess what? The whole portfolio has a cloud on the title. And the only way that you're going to be able to close on that loan is to either resolve the cloud on the title or remove that property from the transaction. So I hope that we were clear here in what are the challenges to a blanket loan, what are the actual benefits to a blanket loan, transaction details, so you know what our multiple maximum LTV is, credit scores. We definitely have a lot of information in the guidelines that we have for blanket loans, so do not hesitate. This is one of the great niches out there to be trying to specialize in.
All right. Thank you, Jose. So I see we have one question. If you have any more questions, go ahead and drop them in there. But the question is, can an investor refinance multiple properties into one blanket loan?
Absolutely happens all the time. We have them going in both directions. They're coming in, refinancing, or they're buying one portfolio with a blanket loan, or they may have 7 or 8 or 9 or 10 individual properties that they may have purchased cash, right? And they purchase it low dollar amount. Now they want to cash out and repeat, right? So the best way to do it, if they're low valued properties, is to put them into a blanket loan, wait for the properties to appreciate in value, usually what ends up happening, and then a year, two, three down the road, now they're looking to refinance out of the blanket loan. Now the properties are worth much more than 75, 80, or $100,000. And if they decide to keep them, now they're going to refinance usually into a regular DSCR loan and keep the whole process moving.
All right. I don't see any other questions, but yeah, absolutely. And I think Jose, like you touched on, you've had some deals where this literally happened to you, and you essentially turned I'm only looking for a tiny loan into a $500,000 loan that accomplished the goal of the borrower, right?
Absolutely. He came to me with the how low can you go in the loan amount? And I basically replied to him asking him, well, talk to me a little bit more about what's your objective here. And that's when and then I asked him also, what do you have available, right, for the transaction? That's when we realized that he really wasn't looking to buy one property. He was just wondering if he could get a property in that price range. And I replied to him that yes, he could do it, but only through a blanket loan. So why doesn't he go and buy several? And he said, well, that sounds like a great idea. And he went and he put 7 properties under contract from the same seller. And to note, this is the beautiful thing on this, the DSCR on that portfolio was over 2.0, right? That's pretty amazing. We're talking properties for $90,000, 90 something thousand dollars, duplexes, mind you, that were renting each side for like $1,200. So it was just an amazingly incredible purchase. But here's the ironic thing too, right? The properties had been on the market for several months, probably 5 or 6 months, because no one had provided the solution for the financing. I'm pretty sure the only solutions being provided to borrowers were you got to buy cash or hard money, right? Hard money, 40%, high interest rate, 50% high interest rate, short term loan. I got to do it again in 2 or 3 years, versus the DSCR that we got for him, which was a super low rate. It was like in the fives, and it was 25% down. So it was a total home run for the borrower and for everybody involved in the transaction.
And I think something to something to keep in mind is that this is actually more common than you would think as far as people have a lot of properties, right? I think some loan officers hear this and say, "Oh, that's somebody has to have a ton of properties, right?" But it's actually more common than you would think now. The Burr craze and the real estate investing, it's all the rage right now, right? So a lot of people are wanting to buy up a whole bunch of properties or already have a whole bunch of properties. Go ahead,
And,
Jose.
and in some cases, be aware that the seller may only want to sell them all in one shot as well. So if you're coming and you want to pick and choose, let me get these two, and it's not going to work. So then you also need the solution to allow you to buy all of the properties in one shot from the seller.
Right. Okay, we do have some more questions coming in. So, question: are there any rules as far as proximity of the properties to each other?
The only rule is the state. They have to be in the same state. That's it.
Let's see. Kind of a long question here. I've been looking at some apartment building websites, came across a portfolio of 14 in the town where I'm from. Looks like a commercial real estate firm. Do agents at firms like this know about these loans?
Well, sometimes they do, sometimes they don't. That's the great thing about building the relationships with the agents is that it's our job to empower them with the knowledge. And believe me, when you do, they will become your referral partners, right? They're going to like all of the tools and solutions that you're going to be providing. So definitely, that's why I say this is one of the good niches to concentrate on because there's not much awareness of this product.
Absolutely. All right. Well, thank you for your questions. We definitely appreciate it. Great thing to know about here. And that actually is a great point at the end to make sure you reach out to not only your regular realtor partners, but it's a great opportunity to reach out to commercial realtors and people that might specialize more in working with investors.
Absolutely. If you see those properties out there, what you should be doing is reaching out to those agents with your financing solutions for their listing. So if you see somebody has that portfolio listed, reach out to them, tell them about the great option that you have for any buyers that may be looking to buy the portfolio. And you can rest assured they're probably going to be referring you to any buyers that come looking at that property as an outlet for financing.
Yeah, absolutely. That's a big part of it, right? Is that they're looking for somebody to finance the buyers that are coming to them because they don't have options, and the more people who can finance it, the higher the price they're going to be able to sell it for, right? So the listing agent is all for having more financing options available to tell people, right? Let's see here. Question coming in from Jeremy: are these business purpose loans that can be originated anywhere, or is it limited to the states LO has an NMLS license in?
Well, they are business purpose loans usually. The portfolio loans that I was going over today are DSCR closing in an entity. So you would be able to originate those business purpose loans as business purpose loans.
Not in all states. Remember, you got to
Right.
check the laws in each state, but a lot of them allow you to do business purpose loans. All right. Well, let's go ahead and wrap it up then. Thank you everybody for tuning in and thank you for the questions. Remember that we do this every Tuesday, Wednesday, and Thursday at 12 p.m. Eastern, where we go through a new loan officer training topic. So we will see you all next week with some new topics. Appreciate you tuning in. And we'll see you next week at 12 p.m. Eastern on Tuesday for the next episode of the Loan Officer Training Series with the Mortgage Calculator.